Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, March the 24th, 2026, of course. Okay, let's have a quick look at some markets. Not a huge amount of price action overnight or even sort of politics or sort of headlines. What we can say, just sort of doing a very quick overview, at least from my perspective, from what I'm seeing, is that there do seem to be some negotiations going on behind the scenes. There's talk of sort of Witkoff and Kushner and JD Vance. Um, talking to various sort of parties in Pakistan, like sort of a neutral ground. There's some talk that the Speaker of the Iranian sort of parliament, I think Ghalifa, a certain Mr. Ghalifa or something, may be a sort of an appropriate or sort of possible candidate for Trump to install. And it's clear, I think, that the Trump administration is trying to go for something like what happened in Venezuela, where you essentially keep the regime and the structure, the political class and structure in place, but you put into power someone who's a little compliant, who is essentially sort of a puppet from Washington and may be able to cut a deal. And it seems as though the Washington has identified the Speaker of the Iranian Parliament, Mr. Ghaliba. I have to check that as a possible candidate. But the reality is, there have been not a lot of confirmation from within Iran, although that could just be posturing. Internally in Iran, it seems to be sort of fairly fragmented between the Revolutionary Guards and whatnot. So the point is, we are in a sort of a fog of war, but it does seem to me clear if we just sort of step back a couple of things. Let's just look at actually what's going on. Number one is that military action is continuing. We saw overnight that certainly the Israelis continue to bombard not only sort of Iran, but also Lebanon and Hezbollah positions. And also the Americans are continuing to, excuse me, still sick. The Americans are continuing to bombard Iran, and we saw overnight that there was actually attacks on some sort of gas facilities. Who knows? Are we going to get retaliations? And it does seem that some of the other Gulf states, and also including Saudi Arabia, are potentially thinking about joining the military effort. So the point is here is that despite Trump's sort of tweet yesterday morning that there was going to be no more attacks on energy facilities for 5 days. The reality is that military operations are still continuing at a very aggressive pace. Two, there's not been any confirmation on the Iranian side that a ceasefire is happening or that serious negotiations are underway. But three, I would also say that there does seem to be some movement behind the scenes. There's definitely a lot of talking going on. Intermediate sort of countries are sort of talking with the Iranians, relaying messages to the Americans. And it does seem as though both sides are potentially searching for an off-ramp. So will we get a cessation of hostilities? Maybe, Trump has imposed a new sort of five-day deadline on sort of energy facility attacks. Maybe by this Friday, we'll see. So it does seem as though things are sort of happening at some point. In terms of the Strait of Hormuz, that is still sort of closed, but not totally. What we're starting to see is that certain ships are transiting there with the permission of the Iranian authorities and often for a fee. There's some talk of a tanker going through overnight, paying, I think it was like $2 million fee to go through. So maybe that's a new sort of possibility. And finally, the American troops are sort of steaming towards sort of the Gulf area. About, from what I'm seeing, 5 to 8,000 US Marines. With the potential of maybe trying to take over one of the Strait of Hormuz or one of these sort of the island of Qasem or Karg. Who knows? But then again, you're reading other stuff basically saying that really the military force necessary for this kind of operation is probably more like 20 to 30,000 troops rather than 5, 6,000. So is that just sort of a leverage thing of Trump, a symbolic thing to have Marines there? It's anyway. The point is that there's a lot of fog of war, but I do believe that a resolution is coming at some point. Um, we shall see. And we saw from the market reaction yesterday, initially, obviously, a sort of a risk-on tone. And again, I apologize. I interrupted the video. I had to get to my trading desk quickly yesterday. Trump's tweet came in at 7:04, right as I was just finishing off the video. But we saw that obviously there was a huge pop in the equities. We saw that oil went down. We saw that gold rallied, and we saw the US dollar go down. And we also saw that yields went down and the price of the bonds went up. So all the classical reactions one would have anticipated. But what's interesting is that, essentially all of those moves, not given back totally, but they've all gone back 50%. And what we've seen overnight here, you can see, let's say on the ES futures here, is sort of choppy price action. I was almost about to say sketchy. That's the insider trading, which is very, very sketchy. But I think here at this point, we don't have a huge amount of economic data. We have the ADP today. We have a flash PMI. In the US, the S&P Global PMI at 945. That could be interesting to start seeing if we're getting some early signs of the economic fallout from the war in Iran. But basically, the market is in a wait and see mode. The market, I think, suspects that maybe there's going to be some kind of negotiation, something is going on behind the scenes. But with the volatility of Trump's foreign policy, in quotes, the policy, it's difficult to put on a lot of size because, there's just massive headline risk here. And certainly institutional trading desks, their position sizes have been trimmed by risk managers and, cutting back in size. So I don't think there's a huge amount of conviction, and markets are simply trading on sort of headlines at this point, or fearful of headlines. Now, if we just look at something like the S&P 500 here, you can say, well, okay, what's going on? And again, we had the pop yesterday, and then that's given back about 50%. We're still trading heavily. We're still trading under the moving averages. And it's clear to me that the lines in the sand is pretty clear. You can look at some of the levels here. Obviously, you've got this sort of horizontal level on the S&P 500 futures, about 65.25. A further level down would be 6400, 6410. It looks like the levels down below. Similar kind of thing on the Nasdaq. And it's pretty simple here. What the market wants to see is a negotiated sort of a truce or a ceasefire, which needs to be confirmed by the Iranians. What we're seeing a lot is the taco or the commentary being stage managed by Trump. It's very one-sided. The Iranians are not playing ball. The market, to have a sustained rally here, needs to see Iranian confirmation. And secondly, we need to see the Strait of Hormuz fully opened and the oil and the fertilizer and whatnot are starting to flow through. And we're not there yet. On the other hand, as I say, the market doesn't want to completely crash because there is still some sort of sense that the US economy, at least, is relatively insulated at the moment, relatively insulated, and that there's a chance that the war may reach some conclusions. On the other hand, volatility is still high. If we look at the VIX, I mean, it's come in a little bit, but you see yesterday it spiked above 30. As we speak here this morning, about 26. So that's still elevated volatility. Obviously, looking at the bond volatility, extremely high. And bond volatility, which is elevated like this, historically has always been a problem for equities. So the equities are going to find it very difficult to rally meaningfully unless the MOVE index and bond volatility gets back down to more reasonable levels. No surprise that oil it remains elevated, although it has come off its high. But again, this is WTI or oil volatility, and you see that over in the Brent and some of the other sort of grades, there's higher volatility. And if we look at something like gold, that's also popping high. So in general, volatility is very high. And again, mechanically, when you have high volatility, every single institution will reduce their risk. So it makes it harder to have a conviction. On the other hand, global equity, interesting here, just looking at essentially US and other developed markets here, you can see that the US had been underperforming and then it outperformed at the beginning of the crisis. And now we're just in sort of equally sort of stressed markets, so to speak. But what we are seeing is that the Euro stocks, they bounced off a pretty key level here. You can see the key level in the Euro Stock 600, 553. You see that horizontal support there broke, although also breaking down through the 200-day moving average. They remain under pressure. You can see over in Germany, pretty weak performance here, even much more so than over in Europe. If we look at Japan, which hopefully will come up. Yeah, if you look at Japan, stuck around the 100-day moving average, still trading on the heavy side. The Bovespa, again, trading heavy, although maybe starting to find a little bit of support. India remains under a huge amount of pressure. Remember that India is a massive energy importer, so they're not enjoying these inflated prices. So India remains under a lot of pressure, and other developed markets and emerging markets in general under pressure. What we're seeing in the stir market, interesting in the stir market yesterday, there was some, I'll just actually go to the special one here. If you look over in Europe, I'm kind of curious to see here, if you look over in Europe, the implied yields. So let's look at December. Quite sort of extraordinarily, the market had been pricing almost four hikes, a full 100 basis points of hikes by the end of 2026. But you can see here that in the aftermath of the Trump tweet, that the December 2026 Euribor contract actually came down. Let's see, it came down by a full hike, so about 34 basis points, so a hike and a half. Subsequently, it's given some of that back. So at this point, the market is still pricing in about just over 3 hikes. So still pretty aggressive, although you can see this is very much a headline driven. Similar kind of situation in the US. Again, just by way of comparison, if we look at the what's priced in approximately for the SOFR December, again, you can see that it came down a little bit, but it's given back as well. So still, the short-term interest rates are pricing in a sort of hiking paths, or at least non-cutting paths for the US and the ECB, and that's the same for the other major central banks. So that is still, the market's still indicating that it is concerned about inflationary pressures and less accommodative central banks, and that's being reflected also in the yields. If you look at the 2-year yield in the US, again, similar to the short-term interest rates, that did come down from the 4% for the 2-year, but you can see that it's come back up. It's risen again, and that's the same for the other like if we look at the 10-year here, similar kind of situation with the yield, and also the 30-year. By the way, for the 30-year, just keep an eye on this 5%. That's a very key sort of psychological level, and I think really, if we do breach that 5%, that's not going to be good news for the equities. So the equity market will be looking at that as well. In terms of some other markets, if we look at metals remain under a lot of pressure. It seems for the moment, if we look at the gold, if we look at the simple moving averages here, it does seem that, if you look at spot as well, that's on the futures, but basically on the spot, you can see that it bounced exactly on the spot price for gold, which also was a little bit of horizontal support here and congestion, so to speak, for the volume profile. But basically, gold bouncing off the 200-day simple moving average here. Not exactly the same level on the EMA, but similar. So gold is holding in there, had a nice little bounce, but it's still weak. And really, let me just get rid of this one here. Really, I'll just put in the fib here. So really, what gold needs to do for the bulls, let's just look at some of the levels here. And again, I'm using this spot as the reference. It needs to get up to this 100-day moving average, which would be the 38% fib retracement, which is coming in at about 4,600. That's going to be the key line. At this point, this is simply a reactive bounce off the 200 and the horizontal support. Gold will need to, at least for the bulls, they're going to have to breach this level of 4,600. They haven't done that yet. So at this point, this is just a reactive bounce. And of course, gold is still worried. Real yields are high, sort of nominal yields are high. The US dollar is still quite strong. So gold is going to find it difficult to rip higher until those other conditions ease a little bit. But on the other hand, I think gold is still, that's probably a very attractive buy level down here. Hopefully some of you got onto that. Just because I think the sort of the macro conditions favoring gold are still more or less in place. Similar kind of price action. Silver, I won't go in great detail, but you see silver also bouncing here. Copper remains weak, hovering around the 200-day moving average. You can see here just trading in a tight range, and that's just because global sentiment is weak. We're going to have to see a global sentiment picking up for copper to pick up. BTC is interesting. It was looking like sort of it did fail at this 38% fib retracements here around about the $74.5, $75,000, and it was this. You see this price action here, very analogous, very similar to what we saw back in at the end of last year. You see this kind of like a bear flag kind of situation here, and a very, very similar technical setup. So having said that, the negative stuff is that, as I say, could this be some kind of bear flag channel? Possibly, and has this been rejected at the 74.5, 75,000 levels here, the fib rejection? Yes, that's the negative. On the other hand, what one could observe is that the lows are progressively higher. So we have higher lows. You can see yesterday's low was actually a little bit better than the others. So maybe this is just forming a very sort of painful and slow sort of base. It's like some kind of a basing formation here. And this is like a grinding up channel. We shall see. It hasn't been resolved yet. Again, the next key test is going to be this level, which has been tested so far more or less 3 times at about the 75,000 level. So far, BTC weakish price action, but not disastrous. That really, if it breaks this sort of upwards channel towards the downside, that is not good, and that would be sort of confirmation of a bear flag channel. And it also needs to break up above the 75,000. We're not yet there yet, but sort of sort of hanging in there just for the moment. In terms of oil, obviously, let's keep an eye on oil. But what I want to point out here is that look at Brent oil. Brent remains very elevated over $100. Of course, on the Trump tweet, it did give up, $10 or so, but it subsequently ground up a little bit. Brent remains elevated, although off its highs. But really, what we need to be looking at is gasoline. Again, that came off the highs thanks to the Trump tweet. But gasoline, which of course feeds into domestic gas prices in the US, which has political implications, also very, very elevated. And if you look at the other grades like Dubai and Muran and Urals and obviously all of those, they're much, much more expensive and so are putting under pressure. And of course, it's diesel and jet fuel. Diesel and jet fuel still are at extremely elevated levels. So we can't just look at WTI, which is this one, and you go, well, that's not too bad. And Trump comes out and says, well, frankly, I would have expected worse. The point is that of all global grades of crude, WTI is by far the least affected. And this does not look at the refined products. And we just need to look at this chart, and then have a quick look back up at gasoline just to see the difference. Okay. And also diesel, very elevated, jet fuel, extremely elevated. So, WTI is not at all telling the complete picture, and don't think that's the whole state of global energy. Nat gas in Europe is also very, very elevated, and in East Asia. Having said that, the Trump tweet did, of course, whack down about $10 or $12 or so. We've subsequently given back a little bit of that, and basically, this is going to be headline driven, and we're trading in this sort of range here, around about $90 to $100 approximately. Very simply, if we get a resolution, we know what's going to happen. This is going to sort of collapse another 5 or 10 or $15. If the war grinds on, if there's escalation, if troops move in, if there's a sort of a ground battle, if there's more energy infrastructure hit, obviously this is going to go higher. This is very headline driven. So at this point, personally, I'm trading very, very short term, looking for key levels, doing a little bit of headline trading. That's the best I think we can go for just at the moment. Just finally, guys, before we finish up here, well, actually, finally, I'm just going to double check there's no Trump tweets, because yesterday, around about this time at 7:04, Trump did a tweet. Let's just have a quick look here, just see on our news wire. There's no nasty. Okay, so nothing so far from Trump at this point. So I just want to quickly check in with some of the sort of the themes. I want to look at, let's say, for example, the airlines. So let's look at equity themes. So let's say I just want to look at jets, for example, which is the US airlines. Obviously, this has been very, very affected. Huge fuel costs. Remember that fuel is around about 30% of the costs for sort of most typically for most airlines. And, some of them do have some hedging programs, but you can see that they've been absolutely battered since the beginning of the war, which is around about here. You can see that the Jets ETF as a proxy has been battered off its lows, but still under quite a lot of pressure. Also, just want to look in at the energy space. That's been doing fairly well. So I just want to look at the home builders as well, because with these elevated yields, this is not great for real estate. So if we look at IYR, for example, you can see IYR is the ticker US real estate ETF. Obviously, with these exploding yields in the 10 and the 30 year in the US, this is not great for the real estate sort of sector. So IYR under pressure, Annaly also under pressure in the real estate space. And then if we look at home construction, look at ITB, which is the home construction ETF. You can see that there was a little bit of relief yesterday just on the Trump tweet, but essentially the real estate and home building under a lot of pressure. You look at DR Horton also under pressure. Lennar, these are home builders also under a lot of pressure. On the other hand, you say, well, who's doing well? So if we look at just some energy, let's look at for example, the XLE, look at that, kaboom, doing very well. It came off a little bit yesterday on the Trump tweet, but subsequently, sorry, yesterday, up again. So this is doing very well. So you can see here who are the winners and the losers. So definitely in the equity space, the index is only showing one sign of it. You look at, for example, the refiners are doing very, very well. with the incredibly elevated price of sort of refined products. So you can see the crack. I love that ticker, CRAK, the crack. The oil refiners ETF also doing very, very well. Again, had a little bit of a down day yesterday on the Trump tweet, but essentially trading at highs. You can see Chevron also, what to say, super, super good, well. Marathon doing very well. ConocoPhillips also doing very well. Valero doing very, very well. But keep in mind, Valero's in the news because yesterday a fire broke out at the Port Arthur refinery down in Texas. That refines about 430,000 barrels per day, so quite significant. It's one of the top 10 in terms of capacity in terms of the US. So, that'll probably put a little bit of support under the WTI price and probably gasoline as well, because no one likes to see a fire in a major refinery. There's some talk, of course, the Iranians are saying it's sabotage and our agents are on the ground. I don't know about that. Looks maybe it was just like a technical problem, unfortunately, a fire there. But the point I'm trying to make here is that within the equity space and the themes, energy doing very well, the refiners are doing very well. But if we go back to, like let's say real estate, anything depending on cheap, any industry depending on cheap funding is not doing well at all as these sort of yields explode. And just to finish off, let's just have a quick look here under the hood. You see that the Mag 7s remain under pressure, although there is a bit of support here on the ETF, on the MAGS ETF anyway, at about $58, $59 here, but still under pressure. Semiconductors still doing relatively well. I mean, if you look at the index, the indices are all below their 200-day moving average down here somewhere. But if you look at SMH, for example, the semiconductor, that's still above the 100-day moving average. So kind of hanging in there. And we saw that before the crisis in Iran, they were definitely the outperformers. On the other hand, if we look at our dear old friend, the software stocks, which had been under pressure, the whole AI story and whatnot, IGV is sort of the proxy. That's under pressure. Although, is this some kind of sort of bull flag here? It looks like a flagging formation. And I just wonder if we get any kind of resolution, even if it's messy, in the Iran situation and yields start to come down, could that be sort of a bull flag, and could we see a little bit more upside there? That's going to be an interesting one to keep an eye out for. Just finally, equal weight also under pressure, trading down towards the 200 moving average. And if you actually look at the breadth, you can also see the percentage of stocks trading above the 50-day average is way down. So very, very thin markets. There's not much market breadth at the moment. Most stocks are under pressure, except for some of these outliers, like the refiners and essentially in the energy space. Okay, guys, I'm going to leave it there. Just a quick final check that there's no Trump tweet. He likes to tell his friends to short oil. And it's pretty incredible. You see that yesterday at around about 7 o'clock, 6:58, 6:59, massive size went on to short in the oil futures, and there's talk about $500 million of sort of notional contracts were shorted. Literally 2 or 3 minutes. Strangely, just before the Trump tweet, similar kind of price action in the sort of action in the S&P futures. So clearly, insiders are profiting on Trump, which frankly is not surprising. Let's just leave it there. Okay, guys, have a great day. Again, keep sizing relatively tight. Watch out for headline risk, and we'll see what happens today. Have a great day. I'll be back tomorrow with the Macro Snapshot, and you can check it out on Twitter at the Macro Shop, for this. Thanks very much. Have a great day.